the end of Asia Crypto Week and after Token 2049 with our guest Kelvin Koh, who is co-founder of Spartan Capital, and as well he is ex-investment banker who used to be with Goldman Sachs. Great to have you here, Kelvin.
Yeah, nice to meet you as well.
So can you tell us how did you get from investment banking into crypto space?
Yeah, I spent most of my career in investment banking, 21 years in total, and a majority of that time I was with Goldman, and I was at one point one of the top ranked research analysts in Asia, and ultimately ran research for Goldman in Asia and became a partner there. And then subsequent to that, I went to a big hedge fund called Indus Capital, which manages about $7 billion of capital, and they manage fundamentals, long-short strategy. So I spent about 3 years there helping them to build up their China team and also launch a China fund. And after sort of spending more than 20 years in TradFi and mostly looking at equities, I was ready for a change and wanted to really spend more time sort of on the early stage tech investing space, which I've been doing for quite a number of years during my Indus and Goldman time. And so the idea was to set up a technology hedge fund, early stage fund. And this was 2017 when the ICO boom was happening. So saw a lot of activity in the crypto space, and I saw a lot of talented engineers leaving very well-paying jobs with big tech companies like Google and Facebook and YouTube to basically build on Ethereum, right? And so that fascinated me, and we quickly started getting involved with many of these companies, helping them to raise capital as well as to invest in them, and that gave us an insight into how the industry worked, the technology evolution that was happening, and also gave us a strong network with many of the early founders in the space. And that was how we got started. And my partners, Casper and Melody, I met them over 20 years ago in Goldman, and they were also very passionate about the whole sort of startup scene and about crypto. And so we decided to work together to create Spartan.
Yeah, so how is your view changed from the perspective of investment bankers? So like you basically started investing into like token projects.
Yeah. I must say that it was interesting because in the early days when we were working on some of these projects and we were launching our first fund, which is a fundamentals-based crypto hedge fund, we started talking to many of our friends who were still in investment banking, right, to try to tell them about what's happening in the space and why it was an interesting time to invest. But the reaction that we got from people was very surprising. They sort of looked at us as though we were doing something almost criminal. I think a lot of people sort of don't understand the technology and what it can do, and obviously in the early days, crypto sort of had some controversy and some unsavory practices. So I think that sort of clouds people's judgment about the industry. But we've come a long way. I think people are beginning to understand, and there's more and more interest in the space, and we're seeing more and more TradFi people sort of coming into crypto.
That's true. And can you share some of your first investments in Spartan Capital?
Yeah, definitely. I mean, we launched our first fund back in August of 2018, like during the really bad bear market. We didn't launch with a lot of capital. We launched, I think, with about $9 million of capital. And our AUM has since...
Were those your own funds, or did you attract LPs?
Yeah, the early fund was a mix. Half of the capital was our own money, and the other half was from LPs. We were supposed to raise 20 million, but a lot of the LPs ended up being frightened by the bear market and didn't invest immediately. But we were so convinced that this bear market wouldn't last very long, and we were not too far away from the bottom, so we launched the fund anyway. And we've grown the fund from one fund that's $9 million to 3 funds that's over $350 million since. And with regards to some of the early investments that we made in the space, we were very early investors in DeFi, right? So some of the early investments would include things like MakerDAO, Synthetics, Chainlink, Aave, which have all become sort of household names in DeFi, right? They've become the giants of DeFi. And that was really what led to our second fund, because when DeFi Summer happened and all of these tokens sort of significantly increased in value and more entrepreneurs came into the space, many entrepreneurs reached out to us to partner with us and to ask us to invest in them. And at that time, we only had our hedge fund. We didn't have a venture fund. And so, because these are very early stage startups, we decided it was better to do it via a venture fund vehicle. So that allowed us to launch our second fund. And it was so crazy because we originally intended to raise only $20 to $25 million. But when we announced the launch of the fund, people from all over the world, like random places in the world, started reaching out to us to invest in the fund. And so we ended up raising 112 million, and we had to quickly sort of close the fund.
Which year was it?
This was in 2020. Yeah, I'm sorry, it's 2021 actually, early 2021. And yeah, so we raised so much capital, and we had to quickly close the fund because we weren't convinced that we would be able to invest all of it over the relatively short lifespan of the fund.
Yeah, it was a real boom. And why did you see the big potential in DeFi back then, like in 2018, like till summer 2020, nothing really happened with it?
Yeah, no, that's a good question. So, I mean, obviously we came from the world of finance, right? And so being able to see sort of these financial activities being conducted over the blockchain was really an eye-opening experience, you know, to be able to, you know, just through one or two clicks, be able to execute a transaction or lend out your capital, was really, I think, you know, quite a unique experience, and you know, certainly beats the experience of, you know, going to a bank and queuing up for an hour to get a transaction done. Even, you know, online banking, which, you know, has come a long way and has become very seamless experience. You know, it's still different than online banking, just because with online banking you're still dealing with intermediaries, and many of these intermediaries don't talk to each other, and transactions still take time to process. Whereas with DeFi, as you know, everything is composable and global, and so it's significantly more efficient, and the cost is also significantly lower. And so I truly believe that at a point that DeFi would lead to an eventual creation of an alternative financial system, which could one day replace the current financial system that we have.
So you believe in the full replacement, or do you believe that both those systems can exist simultaneously?
Yeah, I think banks are not going to go away anytime soon, right? I think a lot of the current generation of people would struggle if you told them to, you know, create a crypto wallet and told them to sort of trade on these DeFi protocols. But of course, with the younger generation that is coming up, they're very curious about crypto, and they're very keen to experiment, and they've also grown up in sort of a digital era, right? So for them, it's second nature. So I think there will be a period of, you know, maybe 10, 20, 30 years where the two systems coexist. But I think over time, DeFi will take up a bigger and bigger portion of the pie, and then eventually, you know, over whatever, 30, 50 years, maybe replace the financial system that we have today.
And how do you see the current adoption of crypto blockchain technologies by banks and institutional investors?
Yeah, I mean, I think the banks are very interested, and they have, many of them have now built internal teams to look at the space and to start investing in the space, and also to advise and to think about their own internal strategies. You know, I still stay in touch with many of my former colleagues at Goldman, and I think Goldman now has over 50 people in its digital assets team, doing everything from creating products or starting to create products for their clients who are interested to get that exposure. They also have an investment banking team that now covers many of the top crypto companies in the space that may be going public and maybe doing an IPO in the next 2 or 3 years. So they're definitely interested and definitely coming in. But of course, the regulations today are still not fully formed yet. and so it restricts what they are able to do. But I've no doubt that in 3 to 5 years, many of them will be in the crypto space.
So is it a good thing that banks and institutional investors are coming into this space, or is it a bad thing because like crypto has been always described like as alternative system which belongs to the public, to people, not just like big whales?
Yeah, I mean, I think if we want to scale crypto and DeFi, I think the reality is that we have to bring in the masses and the big players, and we need to bring in the institutional capital, right? I mean, if you look at what many of the DeFi founders are doing today, you know, with things like AVR, some of the other sort of institutionalized DeFi products, I think they're also preparing for that eventuality. And so I think I think that's important because it creates more inclusive participation, and it also in a way legitimizes the space, right? I mean, if the big companies and big financial institutions come in, it makes crypto more legitimate, and that will eventually also create sort of protection and guardrails for the regular sort of individual investors that are either using these services or investing in them. So I think that's a good thing in the long run. But I think it will also preserve some of that openness and decentralized aspect, right? Because ultimately the banks are not going to control these protocols, right? They may participate in it, but they're not going to control it. So the architecture will look very different from the financial infrastructure that we see today.
But there are some disadvantages when the protocol is not controlled by any centralized entity. Like we see so many rug pulls, the breaches of the contracts, and etc. So what should be done in that direction to make this industry more sustainable and be able to be used by everybody?
Yeah, I mean, I think some form of regulation has to be in place, just to make sure that we have responsible actors in the space. And I think by and large, most of the entrepreneurs that are coming into the crypto space have good intentions, but obviously in a growing sector with a lot of capital coming in, there are always going to exist these bad actors, and I think we need regulations to ensure that these bad actors don't get away, with these rug pulls and scams. And I think if people feel that with these regulations, I think the individual investors or users of these platforms will feel more comfortable, and therefore we will see more widespread participation, which ultimately is the goal that we want to drive. But I'm also hoping that the SEC or CFTC or whoever ends up creating these regulations, that they recognize that they cannot apply all regulations to this new industry, and that they will take into consideration the idiosyncratic features that come with the crypto space, and also generally apply lighter touch regulation to just allow the innovation to foster and grow. So that's what I'm hoping to see from the regulators.
Yeah, and you recently as well made some comments about regulation of DAOs, that a lot of founders just form DAOs to escape from the regulations. So what are your thoughts on that? Can you?
Yeah, sure. I mean, I think the DAO is a very interesting structure in the sense that the power is not concentrated in a very small group of people, and it encourages widespread participation. In reality, I think just based on what I've seen, I think DAO governance can be quite messy, because you could end up with a lot of people commenting and having opinions, and that may slow down decision making. So if and obviously for an early stage tech startup, moving fast is important, and so if a protocol or a platform gets bogged down in sort of continuous dissension and argument, and you can't get to decisions, then it could hinder the growth of these protocols. So I don't think sort of having the DAO governance in place in the early days of a protocol sort of is very ideal. You know, I think we still need to have a team of early founders and a core team sort of working on it, and then once it gets user adoption and greater participation, then the introduction of a DAO structure may work. And I still think I'm still hopeful that we eventually sort of find a model that most DAOs can follow. But at the moment, I think people are quite disillusioned by all the governance problems that we've had, and of course, as you mentioned earlier, some of the founders sort of trying to use the DAO as a way to circumvent regulations and not sort of take on responsibility for the DAO and the legal liability that comes with it.